best strategy for intraday trading in 2025 is the break and retest of some new lower highs or some higher lows, aka market structure. We're halfway into the year and nothing breaks the risk to reward or the win percent ratio on the break and retest strategy. Welcome, my name is Prodigy, and if you're new to my channel, I've been trading for 4 years and I use no fancy indicators, I use no tools, just very simple break and retest strategy, reading price action such as candlesticks, volume, market structure, the momentum of the whole market as a whole, which is reading the Magnificent Seven, and a few other things. Now we're gonna keep it real simple and short in this video and show you guys how simple I like to trade for intraday trading. Of course, this is not going to be a super in-depth to my whole strategy as far as when it comes to using the higher time frames like the 4-hour time frame, 1-hour time frame. It's very simply showing you guys the intraday, such as using pre-market highs, pre-market lows, yesterday's highs, yesterday's lows, and showing you guys how I also make money trading that as well. It's very simple. So let's get right into it and I'm gonna show you guys how. So this is the S&P 500s just this week that just had happened. Now you can see here, this is Tuesday going into Wednesday. Now, all I have marked off is Tuesday's highs. That's it. Now I'm going to show you guys what it looks like to take a loss on a trade like this. Now, this is still literally a trade that I actually would take everything in here is literally in favor to what I look for a trade. Now I'm going to show you guys what it looks like if the trade was a loss, because this trade right here actually was a loss. So now that we're zooming in just a little bit, I'm going to expand it. Now, what do I look for? I look for price action to show me a nice breakout. And you can see in the pre-market, we get a nice strong breakout. Nice hammer candles or long wicks in this case to the downside, indicating that buyers are stepping in, holding this. So it's just telling me that price action is telling me that buyers want to hold above yesterday's highs. So right at open, you can see we get a nice strong bullish candle, the volume as well as what I look for. And you can see the volume is pretty strong right at open, but that's always the case, usually every time. So with all that being said, I usually don't trade the first 15 minutes of market being open. I usually like to see what the market does. And in this case, it does show some good, strong strength to the upside. So my bias is already set for a good break and retest. We got the breakout. Now I need a nice dip entry. Now, as I zoom in here, I'm going to show you guys exactly what I look for. And in this case, this is what I look for. This is what I'm saying. Everything matches to what I need, but it was still a loss. Now check this out. I want to show you guys this because you guys also need to understand how to mitigate your risk. Now in this case, this is the S&P 500s. Of course, I'm not going to trade the same day, 0 days to expirations, OTDEs. I'm going to look for Friday expirations or even Monday's expirations, so next week's, because the drawdowns, the pullbacks won't hurt me that much. It'll only be a few percent to worst case scenario, 10, 12% compared to 0 days to expiration. You enter in on something like this where you get a nice pullback, you enter in on a 0 day expiration contract. Yes, you're seeing a nice green, probably a good 10, 12% here. But this dip here is going to put you down a nice negative 15, 20%, which is why I stay away from those. So with all that being said, guys, this is what I look for. A nice dip entry, pullback. You can see this long wick indicating that buyers are stepping in. Look at the buyer volume on the candles here as well, or on the volume bars. It's showing major strength. Long wick to the downside. Guys, I would just pull the trigger. First 15 minutes already showed strength. Now this next 15-minute candle is indicating that, again, more strength is stepping in. But what happens here? Look how this candle just dips instantly, almost to a stop loss of, let's say I have a stop loss about 10 to 15%. And if you know me, I like to shoot for a 1 to 3. A 10% stop loss to a 30% price target. Now in option trading, that can vary, of course, on the type of option you take, the Greeks, and everything that gets added on. But guys, we're just looking at price action here, and I want to keep it real simple. Again, the candles pull all the way back. Long wick to downside indicating that buyers are stepping in. I'm going to probably enter either Friday expirations or Monday expiration contracts. Boom, I enter in just because this candle indicates that buyers are stepping in. So I enter in. Look how this candle pulls all the way down to, let's just say it pulls me down to a negative 10%, almost at my stop loss or at my stop loss exactly. I'm watching it. Eyes are glued to the screen. I'm noticing that buyers are stepping in again. Now this is great news for me, but what happens here? Sellers take control and it ends up breaking below my stop loss. So I have to take the loss. Let's say this candle closes me out for about 13 to 14%, guys. That is not that bad. Now let's move on to the next trade because we got to go fast. It's already 5 minutes in. I don't want to keep you guys waiting. So boom, we just took a loss on the first trade of the week on Wednesday, trading SPY. Trying to take the breakout on Tuesday's highs. Now what I do here, all I do is simply mark off Wednesday's highs. The day that I took the loss on, I mark off the highest point of that day. Then I extend it to the next day. And what do you notice? It's literally doing exactly what had happened the day before, except this one plays out to the T exactly how I need it to. Again, in the pre-market, we get a nice breakout. Nice retest here. Long wicks to downside, indicating that buyers are stepping in. They're showing that they want to hold above this level, and this is just yesterday's highs. Intraday trading. Then I'm watching the first 15 to 30 minutes of market being open. What happens here? I'm coming down. I'm comparing the volume to the previous day. I'm noticing that it's a little bit greater than the day before on the first 15-minute candle. But again, that had happened the day before, and I still took a loss. So let's see what happens here. First 15-minute candle is a decent green or buyer candle. Guys, pay attention to what's about to happen here. Again, the same exact candle comes, a nice hammer candle, long wick to downside, indicating that buyers are stepping in. And what does that tell me? That tells me that I'm going to enter in on the risk. And let's say it's Thursday, which in this case, on this day, it is Thursday. So what would I do? I would either take Monday or Tuesday expirations, because I don't want to take a same day or let alone a Friday expiration, because those contracts will decay so quicker than if I take a next week expiration. So again, I take it next week, a Monday or Tuesday expiration, enter in after I see this nice long wick to downside indicating that buyers are stepping in. Boom. All you have to do is try your absolute best to hold to a 30% or whatever you feel comfortable with of a gain. Whether you sell out at a 15%, a 20%, a 30, 40, 50%, you just have to do your absolute best to watch the price action and see it and watch it go in your favor. Now again, let's say I'm in these contracts. I'm seeing a nice 10, 12, 13, 14%. It pulls all the way back, and now I'm back down to only 9% gains. Don't panic, guys. All you have to do is either move your stop loss in profits or at break even, or again, just watch price action. Of course, don't leave and not watch what the candles are doing. You have to see exactly what's going on. So in this case, yes, there's a bearish engulfing. It does look a little bit intimidating, but then again, buyers step in, take control, and it's just continuously going on up. Boom, it hits your price target and you sell, guys. That's how simple it is when it comes to trading the break and retest strategy, which here's the retest, and trading intraday price action. Trading yesterday's highs or yesterday's lows. Now let's move on to NVIDIA. Now this one's very interesting because again, I'm not showing you guys my whole breakdown of watching the 4 hour, watching the daily, looking at the weekly, looking at the 1 hour, but I'm keeping it very simple here and I'm showing you guys some very simple market structure or breakouts of some new higher lows or higher highs. Now in this case, guys can see on NVIDIA, all I did was see this level here and see this level here. Look at this. It's a very simple price action level of 146.20. Then you wait for that level to get breaking out. And in this case, it did take all the way till next week to break out on a Monday. So again, let's watch the price action there. Let's see what happens. Or sorry, I said Monday, but it happened on Tuesday. So again, you can see on Monday in the after hours, nothing had happened. But then come Tuesday pre-market, a little bit of a breakout. This is where you get this is where you start watching it. Then a massive breakout. The first 15 minutes of market being open. Then what do you do, guys? Then all you have to do is watch for price action again to come for a retest. And in this case, long wick to the downside, and you just enter in. Now, when it comes to trading NVIDIA, they have weekly expiration contracts. So in this case, it's already Tuesday. It's fine to take Friday expirations or even next week expirations. And honestly, I tend to pick next week expirations. Now, again, it's a very simple breakout and it's a very simple break and retest strategy. Now check this out, guys. It's a little bit of an interesting thing because look at this. Yes, you get the nice break and retest, but look at price just chops around. Now, if this was SPY, 0 days to expiration, you would get clapped. But since this is NVIDIA, same week expiration or next week expiration, it's not really going to do that much damage. Worst case scenario, you gain 2 to 3% or lose 1%. It's really nothing. Now, if you're a swing trader and you manage to hold it all the way to the next day, which I definitely would not have been able to do that because I hate swing trading, then you definitely would have got paid. Now, let's move on to AMD, which is a short setup. So here's AMD, guys. Look at all I did was grab the low of Thursday. That's it. The low of Thursday here. So check it out. The low of Thursday. Then all you need to do is just watch for price action to come and retest it. And in this case, it broke out in after hours. Then all it did was come to retest in the intraday of the next day. Look at this. Price comes all the way to rocket to the general area. Now, most people, you could probably find some nice intraday price action like breakouts like this. Maybe you can catch some open range breakouts in the morning. Who knows? But for me, it's very simple, just break and retest. We got the breakout here. Now here we are catching the retest. So boom, price rockets all the way to the general area. A little bit of a wick to the upside. Wicks to the downside, buyers are trying to step in. But look at the candles, guys. Look at the volume. The buyer volume is slowing down. Sellers are stepping in here a little bit. Long wick to the upside. Worst case scenario, you don't enter right away all the way up here. and get the perfect entry, because of course that sometimes just does not happen. But you watch price action, you notice that the volume starts to kick in just a little bit for the sellers. Then you just wait for a very simple breakdown. You can see sellers stepping in. Again, another long week to the upside. Buyers try to do the absolute best to step in, and you just, worst case scenario, pull the trigger. You enter in. You target today's lows. Boom. You got your price target set. Then you find your stop loss. Boom. Just like that. In this level, and in this case, you're just using the most previous day's lows for the stop loss, guys. And look at how beautiful this risk to reward is. This is more better than a 1 to 3. This is probably like a 1 to 4. I'm not too sure. But either way, all I'm trying to show you guys is how simple it is to trade the break and retest strategy. Because again, all I did was grab the most previous day's lows. You get the breakout. Then the next day or the intraday or whatever the case is, you just wait for the retest. Here's the retest. Watch for price action to break down or breakout, and just enter in, guys. Just pull the trigger. That's it. Now, this is literally my trading style, how I trade every single day. It's what I show my members in my Discord every single time that I take a trade, and it's what I teach. So if you guys want to learn how simple it is to trade the break and retest strategy, then I'll see you guys in the Discord. Use premium code at checkout. Premium is the word, and you guys will get 50% off. So I hope to see you guys in there for this summer to learn how to use this very simple strategy for intraday trading. Now, of course, it goes more in depth using the higher time frames for very simple levels and using those levels in your advantage. I hope you guys enjoyed this video, and please like and subscribe and share this with anybody struggling to trade the intraday or anybody just struggling to use the break and retest strategy. Now, I hope to see you guys in there, and I'll catch you guys on the next video.